Very good morning. You're watching India Market Open with me, Tamanna Inamdar and Niraj Shah. We are set for an exciting week. This is the big one.
Yeah, it is the big one, Tamanna.
So,
I mean,
everything, FOMC meet, the budget, all of that happening this week and much more.
Also, 20% of S&P 500 earnings come out this week. So big tech, it's a big one. And we are in the midst of what you could argue a bit of a corrective phase, isn't it? 2 straight weeks of a downtick coming in, even if last week was truncated, and our own results continue to flow. So it's probably as potent a week, aside of the May week when the election results come out.
Yeah.
This is probably the most potent week for the whole year, you could argue.
You know, just talking about elections very quickly, and we'll talk about it a bit on the show. How can something that's already been discounted be discounted even further is the question. Over the weekend, a lot of political fireworks with the Bihar Chief Minister Nitish Kumar becoming Bihar Chief Minister Nitish Kumar again for the 9th time. But in the flip, this time he's chosen to partner with the NDA. Significant because it comes before the election and Bihar has 40 Lok Sabha seats. We'll talk about that.
I loved it how you put it, Tamanna.
The
Just the apt way to put it, really. But yeah, you know, if anything, it probably strengthens the sentiment. So who knows? But really doubt. As you said, what has been discounted can't be discounted further, maybe.
Perhaps number of seats. But all right, let's start with the setup and start with what we've seen globally. Like Niraj said, it's a big week coming ahead. And you know, it's more about anticipation than what has gone by. You have 19-20% of S&P 500 who are going to put out their numbers. There's the big Fed data coming in. And you saw while Wall Street was muted when it shut Friday, you did have futures showing a bit of apprehension. What is important is that key data is pointing in the right direction. So you had GDP numbers for the quarter gone by and the full calendar year in the US shows that everyone who was talking about recession in the United States was proven terribly wrong. So you have hot growth numbers, you have pretty decent inflation numbers. You're setting stage for a soft landing and the kind of a Goldilocks mood that the market is looking for. So that's looking positive. But having said that, a bit of trepidation, which you can see in the yields as well, at about 4.13 last I checked. Yes, so softer inflation data has kept those booming. The story really panning out on crude. The crude front is where you're seeing some action coming in because of a couple of factors. One, strong US GDP data. China is taking corrective action to boost its economy. So if your two largest economies are going to fire up, your crude demand is going to go up. And the Middle East crisis continues. In the latest, 3 US servicemen have lost their lives in attacks from Iranian-backed militia. So we'll have to wait and see if that flares up any further. Just a quick look at Asia. Remember, your GIFT Nifty is showing a positive implied open, and most of Asia also up in the green this morning. So we might see a good start to the day, at least. Niraj, after a truncated weekend, you are seeing some positivity coming in, and quarterly numbers, some of them absolute sizzlers, while some have not done too well, of course.
Yeah, but more sizzlers than otherwise. You are absolutely right, Tamanna. But you know, just the fact that it was very unlikely that we might have a sharp rally for global markets in a week ahead of Fed speak. Everything else notwithstanding, from a world markets perspective, FOMC and what they do, I think a lot of notes have come out said that if indeed the SPX starts now baking in that the rate cuts won't happen in March. If at all the Fed commentary suggests that, then we're in for a sharp correction, 5% to 7%. So if that were to happen, will the markets, you know, kind of give credence to that fear and therefore stay muted for a better part of this week? Very likely that that is something that you might well see in today's session as well as for the week. So very unlikely that there will be a sharp rally. For our markets, FII selling has now crossed 35,000 crore rupees. It's a in January thus far, that's a large number. Keep in mind that it's not just our markets, but a clutch of other EMs which are seeing this selling, and China is mopping up global flows. Much as we like to believe that China will stay on the sidelines, there is money flowing in, tactical money, taking advantage of some of the valuation numbers that exist in some of the Chinese companies. And these are largely ETF flows, so they're not coming for maybe specific stocks. But yes, China is getting its fair share. I think the EPFR data seems to suggest that last week a clutch of money went into China. So very likely that that is what's happening currently. The FI selling number that we're seeing very large is not because of India-centric reasons, but because of the fact that some of the EMs are seeing selling and that money might be going into China. So that's to be kept in mind. And which is why maybe while private banks are near some key supports, they are dragging the indices lower. They are not reacting to good news. They are reacting to bad news. And despite the fact that they are near support levels, we aren't seeing too many triggers for private banks hitherto. I mean, ICICI Bank on a very strong set of numbers went up one day and came off the next day. And that just shows you the weakness in the private banks per se. So, and IT has done its bit already. So we have about, you know, if you move the PSU banks out, still about 35, 37% or 38% of the weightage, not quite having the zing. Let's wait and watch what happens. But yeah, a week of consolidation until the Fed. Maybe a lot depends on the Fed, and then Thursday when the big budget comes out, Tamanna.
I mean, what a day Thursday is going to be. You'll have the Fed decision Thursday morning. You'll have the budget coming in. Yes, everyone's saying a vote on account. But, you know, some announcements will show directionally where government investments are going to come in. Some stocks that we should talk about this morning and a whole list of them on action. I'm starting with HDFC Bank for a couple of reasons. One, it has been the most volatile counter all of last week in everyone's headline, so to speak. And there was a bit of positive news sentimentally, though, over the weekend, where they've received a nod. LIC has received a nod to acquire 9.99% stake, nearly 10% stake in HDFC Bank. So it's not going to be a huge material impact, but yes, maybe some positive sentiment on a counter which has gotten beaten down a bit. But yes, it's all about the numbers. And I want to start with Adani Power, which has had a complete stellar set of numbers that have come out, and you know, obviously revenues up 67%, your EBITDA also going up robustly. There is some, of course, you know, sort of previous expenses which were adjusted for, and all of that has come in. But just look at the margins on its own. The margin boost is up 1682 bips. Margins are as high as 36% versus 19% year on year. Profits as well have absolutely zoomed. They've also prepaid long-term debt worth 810 crores during Q3 and 250 crores during Jan 2024. Of course, standard disclaimers when we talk about Adani Group companies. You're watching NDTV Profit, which is part of the Adani Group. Macrotech is another one. Again, excellent numbers, and you know, it's important to see what real estate stocks are doing, because all of them sort of ran up in the same wave. But which are the companies which are really doing well? And Macrotech is definitely one of them. Revenue is up 65%, EBITDA up 118% for Macrotech. Margins very robust at 30% versus 22% last year this time. So you have over a 7% increase in margins. Your net profit also up 24%. The company is going to raise more money. So the board has approved proposals for raising up to 5,000 crore rupees versus multiple instruments. So definitely Macrotech one on the radar. And just I would round off with some of the oil marketing companies because important news, and I think this is crucial, which came in over the weekend, also telling us what we're going to see in the budget. The government is going to halve the amount of equity infusion in oil marketing companies to help them transition to green energy. They were going to give them about 30,000 crores. It's coming down to 15,000 crores, Niraj. No real reason given for it, but you know, one can join the dots. They need to keep the fiscal deficit targets, and also your retail pump prices have not changed in the last, I think, 20 months or so, while crude prices have gone down. So they're making good profits. They can spend their own money. So maybe IOC, HPCL, BPCL want to watch. A clutch of notes on HPCL whose numbers were also out, and not many of them are very positive. Jefferies has maintained an underperform with a target of 330. Morgan Stanley maintains an overweight with a target of 555, while MOSL has upgraded to a buy. So we'll have to see what these companies do.
Yeah, most certainly. So it's interesting set of names, Tamanna, already, and some of which will react. Macrotech, I mean, the best ever quarter that they've had, so that'll be interesting. Aside of that, some smaller names which will probably have a strong reaction too. So Electra Green Tech stood out for me. Revenues were up 33% at 342 crores versus 256. Margin showed a bit of a beat, 14.27 versus 13.71, and a net profit which was up about 77%. Now remember, it's a key for Electra is the kind of orders that they win ahead, and what is it that they're guiding on their execution once these order wins are in, because some capacities are coming on stream for Electra. It's a conversation that we'll have with the management, which will probably, I think we're talking to management tomorrow, if not today. So I think Electra Green Tech certainly remains a stock in focus. Good numbers may react further. Watch out for that one. In terms of numbers reaction, Zen Technology is right up there. Revenues up 89% at 99 crores versus 52 crores. Margins expand meaningfully from 31.84 to 42.71%. So strong show on the margins, as a result of which the bottom line increased more than the top line, 150% at 30 crores versus 12 crores. Now, you know, Zentech has repeatedly said on multiple platforms, including ours, that they'll probably do 450 crores of revenues for FY24. They've done about 300 till now. So they need to deliver a strong quarter in quarter 4, but these numbers should enthuse the street, so watch out for this one. And multiple other numbers, when we'll get to all of those, but Shakti Pumps stood out quite meaningfully, really. Look at those numbers, really. 57% uptick in revenues for Shakti Pumps, but the margin performance from 7% to 14.31. This is what happens when operating leverage comes into play. So 735 basis points expansion in margins. PAT at 45.19 crores versus 11.25 crores. That is some performance in a quarter, and despite the fact that the stock has already had a meaningful move, look at the 1-year performance of Shakti Pumps and you will see what I'm talking about. The last 1 month is okay, 3%, but the last 1 year, the stock has had a terrific move. But these numbers do pay credence to that kind of an up move. So watch out for Shakti Pumps as well. And I know Tamanna has more stocks, I have more stocks, but I just want to mark one based on Brokerage Notes, and that is Shriram Finance. The numbers came out. Everybody who is anybody has said very good things about the numbers and given a good verdict. So I'm just bringing the verdict here because that will tell you the story for Shriram Finance. JP Morgan has raised the stock to an overweight rating, a target price of 2850. Morgan Stanley says it's a solid quarter and attractive valuations with an overweight rating, target price of 2700. They in fact go on to say that we think valuations and forecasts are undemanding. We remain bullish. HSBC has increased the target price of 2720 from 2630 on higher EPS estimates, and even Nomura went up higher on the target price, I think 2700 or thereabouts. So clutch of brokerages out there, Tamanna, very constructive on Shriram Finance and could do well. I have more, but I'm sure there are some others that you want to mark as well.
Just a couple of brokerage notes that I found noteworthy this morning, and we should talk about SBI Cards. Which the numbers were perhaps not the most scintillating, maybe a bit disappointing. So Morgan Stanley has downgraded to equal weight. Target price has also been reduced to 750 on SBI Cards. Net slippages, as per this note, were higher than estimates in Q3. 2 more quarters of elevated credit costs is a concern, and there's no real confidence of normalization beyond this, and PE multiples will also be capped. The Citi research on RIL also caught my eye. They've maintained neutral with a price target of 29.10 and say that project returns could be hampered by oversupply in China. I thought that was interesting. They're targeting phase-wise commissioning of its solar manufacturing capacity as well, and they say RIL's HJT technology is not popular among cell makers. So a couple of notes there, but in result season, typically too many stocks that you have to focus on. And
Tamanna, two companies which got massive subscriptions, and which is why it's important. Tata Technologies, right?
Yes.
Big one. Now, you could argue that it's a mixed number because revenues were up just 1.6%, not that great. And we've seen with Craftsman and some of the others that the powertrain division largely hasn't done well. It's a concern for KPIT Tech as well. But Tata Tech, 1.6% uptick in revenue, ho-hum if you will, but margins expand, 141 basis points at 16.23 versus 14.82, as a result of which a 6% uptick in profitability. So bit of a mixed number. It's not trading at cheap valuation, so that's one small concern. Let's see how the stock reacts. Maybe post the con call, we'll get the brokerage notes and con call commentary might be interesting. So that is one. The other one, which got massive subscription, is Aeroflex. Very strong subscription numbers. Revenues up 11% therefore in the quarter at 73 versus 65. So that's okay. But the margin performance very strong, from 13.93 to 18.89. 496 basis points expansion in margins, and net profit therefore up 75% at 9 crores versus 5 crores. So clearly, from amongst the newly listed stocks, this has done very well. And the last stock on my radar, aside of Intellect Design and Craftsman Auto and a lot of others, but the last stock on my radar is Cyient. Not a cheap stock. Revenue is still okay, 2.4%, but margins down 41 basis points quarter on quarter at 17.9 versus 18.31 for Cyient, as a result of which a 16% downtick in PAT. I would reckon on a good day, there's one number that will stand out as a bit of a weak one. Let's see how it goes.
Yeah, and Cyient has been on top of a wish list of so many of our experts who've come in.